In 1971, President Nixon took drastic action, severing the dollar's link to gold. This decision sent shockwaves through the global financial system's very foundations. The US dollar, once anchored by gold, was now dangerously adrift and vulnerable. But from the ashes of collapse, a brilliant new pact was forged in secret. In 1974, a clandestine deal was struck with the Kingdom of Saudi Arabia. Its terms were simple, yet its implications would reshape the world. Saudi Arabia would sell its oil exclusively in US dollars worldwide. In return, America offered military protection and sophisticated weaponry. This arrangement became known as the Petrodollar system. It created an endless global demand for the American currency. Every nation now needed dollars to buy the lifeblood of their economies, oil. This demand financed America's deficits and cemented its financial dominance. The petrodollar was the new gold standard, backed by crude instead of metal. For decades, this system provided unparalleled stability and power. It became the invisible engine of American prosperity and global influence. But no empire, no matter how powerful, can last forever without challenge. The first major shock came with the September 11th terrorist attacks. The geopolitical landscape shifted irrevocably, straining old alliances. America's subsequent wars in the Middle East carried a staggering cost. These conflicts were financed not by taxes, but by trillions in new debt. The 2008 financial crisis exposed profound weaknesses within the system. The Federal Reserve responded with unprecedented quantitative easing. This meant creating trillions of new dollars out of thin air electronically. While it saved the banks, it devalued the currency held by everyone. Global trust in America's financial stewardship began to quietly erode. For the first time, rivals saw an opportunity to challenge the dollar's reign. Meanwhile, a silent revolution was underway in American energy. The shale boom transformed the United States into a top oil producer. This energy independence altered America's strategic interest in the Middle East. The symbiotic relationship that defined the petrodollar was now changing. China observed America's wars and financial crises with strategic patience. Its economy grew exponentially, hungry for resources and global influence. Beijing began a long-term calculated campaign to internationalize the yuan. They launched the Belt and Road Initiative, a modern Silk Road of influence. This colossal infrastructure project came with strategic strings attached. Russia, rich in resources, watched the eastward shift of power with interest. Western sanctions after the Crimea annexation pushed Moscow towards Beijing. The two giants began to openly discuss de-dollarization of global trade. They envisioned a new, multipolar world order, free from American dominance. The first concrete challenge emerged: bilateral currency swap lines. These agreements allowed nations to trade directly, circumventing the dollar. For the first time, the dollar was no longer the sole medium for commerce. Then came the most ambitious project: a new international payment system. This system was designed to rival America's powerful SWIFT network. It offered an alternative, a digital highway beyond Washington's oversight. The most significant threat emerged from an old partner, Saudi Arabia. Crown Prince Mohammed bin Salman ushered in a new, ambitious era. His Vision 2030 aimed to liberate the kingdom from its oil dependency. This long-term strategy required deeper ties beyond a single partnership. In a historic move, Saudi Arabia joined the China-led Shanghai Cooperation Organization. This was a profound geopolitical shift, a diplomatic earthquake for Washington. Then, the unthinkable began to be whispered in global financial corridors. Saudi Arabia openly considered pricing oil sales in Chinese yuan. For Washington, this was not merely an economic discussion, but a direct threat. The petrodollar's very core, dollar-denominated oil, was now under negotiation. Iran and Russia, long ostracized by the West, were eager participants. They began selling their oil to China and India in currencies other than dollars. Each of these transactions was a small crack in the dollar's armor. A new axis of resistance, financial in nature, was formally taking shape. Their goal was clear: break the dollar's monopoly over global energy markets. Brazil and Argentina, South America's giants, made a stunning announcement. They proposed a common currency for regional trade, bypassing the dollar. This was not an isolated event, but part of a growing global pattern. The BRICS alliance began aggressively expanding its membership roster. This bloc now controlled a massive share of global GDP and oil production. Their collective ambition was to create a parallel financial ecosystem. Even longtime allies like the UAE and India began settling trade in local currencies. The weaponization of the dollar through sanctions had unintended consequences. Nations saw the risk of relying on a system that could be turned against them. They began de-dollarizing their central bank reserves as a precaution. Gold purchases by central banks surged to their highest levels in decades. This was a clear vote of no confidence in the future of fiat currencies. The world was preparing for a potential shift in the financial world order. Each move, each bilateral deal, was another domino falling in a long chain. The chain reaction was now underway, and it was gaining momentum daily. Meanwhile, back in Washington, the national debt surpassed $33 trillion. The political system appeared locked in perpetual and paralyzing gridlock. The Federal Reserve was trapped between inflation and economic collapse. Raising interest rates to fight inflation risked crashing the entire economy. It also made servicing the colossal national debt exponentially more expensive. The petrodollar recycling mechanism had once made this debt manageable. But as global demand for dollars waned, who would finance the deficits? The foundation of American power was not just military, but fundamentally financial. That financial foundation was now showing signs of severe structural stress. The U.S. responded with a strategy of division, the CHIPS and SOAR Acts. This was a massive bet on reindustrialization and technological supremacy. The goal was to decouple from Chinese supply chains and regain control. A new Cold War was emerging, this time fought with tariffs and technology. The Biden administration framed this as a battle between democracy and autocracy. But for many neutral nations, this was an opportunity, not an ideological war. So, what does the petrodollar endgame actually look like for the average American? The most immediate and painful consequence would be rampant price inflation. As the dollar's value falls, the cost of all imported goods would skyrocket. The Federal Reserve would lose its ability to control the economic narrative. Interest rates could soar, making mortgages and car loans unaffordable for many. The stock market, buoyed by decades of easy money, could face a severe reckoning. America's ability to fund its military and project power would be constrained. The social contract, built on the promise of perpetual prosperity, would fray. This is not a prediction of collapse, but a warning of a painful transition. The world is not abandoning the dollar, but they are building alternatives. The era of the dollar's absolute monopoly is drawing to a definitive close. We are moving towards a multi-currency reserve system, a fragmented world. In this new world, economic power will be more dispersed and regionalized. The United States will remain a leading power, but no longer the hegemon. This is the great financial reckoning that has been decades in the making. Is this outcome inevitable, or can American policy and innovation still prevail? The first path forward requires a return to fiscal discipline and responsibility. This means making difficult, politically painful choices about spending and debt. Entitlement reform and defense spending must be on the table for discussion. Second, America must aggressively invest in its next generation of advantage. Leadership in AI, quantum computing, and biotech could define the next century. This would create new, high-value exports less dependent on currency strength. Third, the U.S. must rebuild trust by strengthening its democratic alliances. A unified front with Europe, Japan, and Australia can still wield immense power. Finally, America must negotiate from a position of strength, not desperation. This includes modernizing international institutions like the IMF and World Bank. Giving emerging economies a greater stake in the system fosters cooperation. The transition will be challenging, but it also presents a historic opportunity. An opportunity to build a more sustainable and resilient economic foundation. One less reliant on the fragile geopolitics of a single commodity, oil. The end of the petrodollar will send ripples across every ocean and continent. Oil-producing nations will see their economic stability become more volatile. They will be forced to navigate between competing great powers with care. Europe will be caught in the middle of this new great game for influence. The euro may strengthen, but it also faces its own internal structural challenges. For developing nations in Africa and Asia, new patrons will emerge offering deals. This could lead to a new era of investment or a new era of debt dependency. The global south will have more options, and with that, more negotiating power. The nature of globalization itself will change from a single model to many. Supply chains will regionalize, becoming shorter but potentially less efficient. This rewiring of the world's economic circuitry will take decades to complete. In this new world, financial power will be more diffuse and less predictable. The risk of miscalculation and conflict between major powers will increase. The 21st century is being reshaped before our eyes in real time. We are all living through this great, uncertain, and historic transition. The petrodollar system was a brilliant temporary solution to a 20th century problem. It extended American hegemony for 5 decades beyond its natural lifespan. But all systems, no matter how dominant, eventually become obsolete. The true test of a great nation is not its power, but its capacity for adaptation. Will America cling to the fading glory of a bygone financial era? Or will it innovate, compromise, and lead the way into a more complex future? The choices made in Washington, Beijing, and Riyadh in the coming years will determine the economic and political landscape for our children. The petrodollar endgame is not an apocalyptic event, but a profound shift. It is the closing of one grand chapter in the story of American global leadership and the uncertain, unwritten beginning of the next. The reckoning is here. It is financial, geopolitical, and deeply philosophical. How America responds will be its ultimate legacy to the 21st century world. The age of the petrodollar is ending. The question is, what comes after? The end game is now, and we are all participants in its final unfolding act.